Strategy video. In this video, I'm going to be talking not only about the entry, but more importantly, what you do after the entry. This being the case, I'm going to use a very simple entry in this. You have a 50-day exponential moving average on a euro-pound chart. You can see we have decidedly sliced through it, and it started to turn up. So somewhere in this neighborhood, you'd be looking to go long, and that makes perfect sense. Now, unfortunately, what most traders will do is they'll look at this high here and they'll say, you know what, we're probably going to run into trouble there, and they'll take their profits. While that is a profitable trade, it's also a mistake. By adding to the position, you can really make your trading just accelerate to the upside. So once we touch this area here, you know, instead of jumping out, what you're waiting to see is some type of swing. So you could add slightly to this position once we break above it. And if you're looking at the 50-day exponential moving average, you don't see any reason to be concerned, at least not yet. And at this point, you've got 1.2 positions. So that's your full position, and then you add 20%. Now, you can tweak the percentages to whatever you like, but I find 20% is enough to make a significant difference. The next thing that I would look at is, where's the next high? Well, we rally here, we start to pull back a little bit, and you keep an eye on that. And then you add another 0.2%. So now you're at 1.4 position size. We pull back a little bit. We make another high. We pull back again. We break above that high. You could be at 1.6. Now, depending on how you played this, you probably would have ended up with this position here. This would have never been filled because this position here would have never really accomplished breaking above there until much later. So what you have is you have one position, 1.4 positions, 1.6, and then 1.6, 0.2 of it ends up being negative. But 1.4 ends up being positive, and much more positive than that. So essentially what you're doing is you're adding and you're giving your trade, your trend running trade, an opportunity to make significant improvements on a simple just buy and hold, or a buy and take out the next resistance barrier. By adding to your position, when you get a very nice trend like this, you can really supercharge your returns at the end of the year. And you can see, you can make the same argument here. We had this explosive candle here. It cleared that. The moving average turned right away. And, you know, even if you got in at the end of the day, you got 1.0, one full position. There's your high. We pull back. We break above there. Now you're at 1.2. We pull back. It's starting to flatten out. We break higher. Now you would have 1.4 all the way up here. Obviously wouldn't get it. It had very negative returns or pricing over the next several sessions. Probably out then if you weren't out here. So either way, you've added to your position. This works in, you know, both directions. Obviously, you can also perhaps look at various trading opportunities in this sense. So for example, you can see that a choppier pair has longer runs, and then we pull back here, did not make a new low, but as we rallied over here, you can see dollar Canada up there. If you went long on one of these impulsive candles, That's your next trigger point. You add it there, and so on. The moving average turned around. That probably, the 0.2 would probably have been about a break-even trade. But when you do the, the quick spreadsheet math, what happens is you end up not with full positions every time you add, because the problem is with that, then it becomes much more dangerous. You lose quite a bit more profit. When you are only taking 20% of a position, then it can go against you for a little bit and let you stay in the market much longer. So you can see you could rally here, you could pull back. Once you get up here and you add this 0.2, when it does pull back, you still have all of this full position, so you're not losing a bunch of money, but it does compound. Think of it as compounding interest. So play with this a little bit. There are a million ways to do this, but this is something to think about. Add small incremental positions on top of your core position that's already making money.